Take a look at this. One of the A's in the FANGs firmly in bear market territory, down more than 23.5% since its July 13th 52-week high, and it ain't Apple. Amazon's drop is not stopping the e-commerce giant, though, from announcing a grand plan today to bring its no-cashier Amazon Go stores to the suburbs. The grab-and-go grocery store will open a second location in La La Land and just a walkout store. They're called Just Walkout because you don't even talk to a cashier. They'll open one later this year in Mill Creek, Washington. That's about 20 miles northeast of Seattle. But where there's a store, there's got to be a warehouse. And Amazon's landlord, Prologis, is the head honcho of warehouse logistics. With a 1 billion square foot global portfolio on 4 different continents in 19 countries around the world, it has more than $2 trillion worth of goods flowing through its warehouses. So it's also a big link in the supply chain. In a Fox Business exclusive, we want to bring in Prologis co-founder and chairman, CEO Hamid Moghadam. Hamid, are we right with that assessment? Where there's a store, there's a warehouse, and what might these Amazon Go stores mean for Prologis?
Absolutely. There's always a warehouse somewhere for everything, because ultimately where the goods are placed, whether it comes directly to your home or it goes into a store, there's always a warehouse supporting it all the way up and down the supply chain. And I think increasingly you're going to see retailers become omni-channel. The bricks and mortar retailers are going to do e-commerce, and the e-commerce players are going to do bricks and mortar. So I think there's going to be a blending of these systems.
Well, I think you're right. I mean, we really are seeing that, and Amazon takes the lead because it was the original e-commerce only site, and now it realizes, wait, we can actually maybe disrupt the storefront kind of opportunity and experience. You know, what I find fascinating, though, is your business in particular. Your stock is up today. You're not in correction, although last I checked, you're kind of close. However, year over year, you're still up. So Prologis, as you look at exactly what's going on the landscape, you guys had said that you basically sold out your warehouse inventory in the fourth quarter. You said that. You said that 98% of your properties had been leased by December of last year. That's incredible. What should that tell our viewers about the economy right now?
First of all, the economy, as best as we can tell, is very strong. Certainly the goods economy is strong. I wouldn't want to be in the experience economy, although I think that's going to end up being pretty strong as well once we come out of Omicron. So every sign we see points to the strength of the economy. On top of that, there is a real shortage of space because the supply chains are growing because of e-commerce, which is much more warehouse intensive than bricks and mortar retail. Because you're shipping parcels, you're not shipping pallets into stores. So each unit of sales takes a lot more warehouse space in e-commerce, and that percentage has been going up and up and up over the years. And then you have to add inventory to build resilience in the supply chain. So the combination of those two factors has taken a good business and made it a great business. And of course, on the supply side, it's very difficult to build warehouses in markets where people actually live and consume. So the combination of very strong demand and tight supply is leading to a lot of pricing power and good earnings growth. And you started out by talking about the stock price. I don't really control the stock price, but our earnings have been growing rapidly in the last decade, I would say, and our guidance is for even stronger growth going forward.
So how does the supply chain and the tangles within it play into what we are seeing right now? Because you also have big names like Home Depot, FedEx, UPS, Cisco, the food company Cisco, as your biggest customers, certainly some of them, and they are package intensive. How are you seeing the supply chain through the window of January 2022? Is it loosening up a little bit? Is the logjam still very tightly in place?
I think if you put aside the pressure of the Christmas season, shopping season, and sort of compare it to the last September or October, I think we're essentially in the same place, maybe a tiny bit better. But of course, the pressure of the Christmas season really made it bad. And the visual of all these ships parked outside of the port of LA was a great story. But those ships are still there. They're just parked further out into the Pacific. So, and that's not the only place in the supply chain that's clogged up. There's a trucker shortage. There is this stuff is piling up in ports. It's piling up in warehouses. So, whenever you have a shock to the system, these supply chains that have been optimized by engineers to the nth degree are built to deal in a certain environment. When you introduce a little bit of uncertainty, it just throws the whole thing out of whack. And that's what we're dealing with. It's going to take a while for this to straighten out, for sure.
Hamid, J. Powell and company are meeting as we speak. In this hour tomorrow, we will find out how aggressive or not they might be about raising rates. If you had his ear as a businessman who deals with real estate, supply chain, and product moving all over the place, what would you say to the Federal Reserve?
I think it's prudent to actually rein in some of this QE that we've been having. This business of expanding the Fed's balance sheet forever and keeping rates at negative rates in real terms, we're going to have to pay the piper. And I think the dealing with it sooner rather than later is the way to go. The bond market doesn't seem to be too freaked out about inflation. I mean, the long bond, the 10-year bond is still 2%, which, maybe it's a little bit higher than it was a year ago or a year and a half ago. But if you look at the 40 years of my career, it's probably the lowest it's ever been by quite a bit. So the economy can handle it. There's enough strength there to handle a little bit of headwind from interest rates.
Thank you for being a businessman who actually thinks about the country first and then your business. I mean, I think that's really interesting. It is quite true. We need to tamp down on inflation. That might mean higher rates and more expensive borrowing. But Hamid, thank you. Please come back. We appreciate the perspective from Prologis' standpoint.
Nice to see you. Take care.